Something that's good to talk about with clients is what Wade Pfau talks about. If you don't know who Wade Pfau is, he's one of the foremost retirement income experts in the industry, and he really sings the virtues of annuities as well as cash value life insurance. But what he talks about or has talked about here recently is the ability for consumers, even if they're looking for short-term liquidity, I guess, the ability for those consumers to leverage the long-term nature of insurance policies, whether it's annuities or life insurance. He specifically has talked about life insurance. Now, what is his point here? His point is insurance companies' general accounts, what those insurance companies invest yours and my premium in, is generally longer term assets. We could be looking at 10-year treasury bonds. We could be looking at 10-year corporate bonds, 30-year corporate bonds. And by the way, a majority of the general account of the insurance companies are corporate bonds, not treasuries, but I won't go into that a whole lot. So you have this long-term nature of the general accounts of the insurance companies. But when you're talking with a consumer about them needing to take income against their life insurance policy within 10 years or 15 years or so, what you're talking about is being able to participate in the longer nature returns that the insurance company is getting, because we all know that longer term investments provide higher interest rates than shorter term investments, at least all else being equal. So as we talk about that, just know that consumers that maybe have a shorter term time horizon than the insurance companies have, that can be a good way to get arbitrage, so to speak, on I, the consumer, want a policy that's going to have, say, a 4% return on it, even though I'm only going to have my money in there for, say, like 10 years. And if I were to go out and buy a 10-year investment, I wouldn't be able to get, say, 4% as an interest rate. The insurance company, however, is, because of the long-term nature of their portfolio, and they're effectively passing a lot of that through to me. Multi-year guarantee annuities paying higher than certificates of deposit. I have just explained the reason, one of the reasons why insurance companies are able to provide more than if the client were to otherwise disintermediate the insurance company and go out to those markets directly, because of the long-term nature of a general account of an insurance company, and that insurance company passing through much of that longer-term nature to the consumer, even if the consumer is looking for like a 3-year multi-year guarantee annuity, for example. Although there is some extent to where that short-term nature that the consumer is going to have their money with the company does have to be reflected somewhat in the interest rate the insurance company is providing the client.